Hey everyone, my favorite Bitcoin analyst is James Check, who goes by Checkmate on Twitter, and I just posted a few minutes ago, I posted a link to his latest analysis where he talks about what's likely to happen at various Bitcoin price levels. And because that is behind a paywall, I figured I would give you a sort of quick verbal summary of some of what he's talking about. Okay, so the first thing to note is that, we're very close to a Bitcoin all-time high. Bitcoin is $104,000 per coin right now. The all-time high is 109, so we're within 5% of the highest Bitcoin has ever been. His expectation, as is mine, is at some point we will blow through the all-time high, pass 110, and usually when you hit a all-time high, there are some people that sell Bitcoin because it's the highest it's ever been. They bought it right near the top. They didn't know what they were doing. They got caught up in the fear of missing out, FOMO, and they bought Bitcoin at 108 or 109,000, and here's their chance to get off the train at the price they paid. So some people will do that, but typically there's enough momentum to blow past that. According to James Check, once we get to about $120,000 per Bitcoin, you start to get a pretty significant amount of the holders of Bitcoin in a pretty significant profit. Now, obviously, when you hit 120,000 for the first time, 100% of Bitcoin holders are in a profit because every all-time high above 109,000 means that nobody in the entire history of Bitcoin has ever bought Bitcoin for less than that, which means literally 100% of people who own Bitcoin are in profit. But people don't tend to buy things with their Bitcoin that result in a significant liquidation of Bitcoin until they are in more profit than that. They tend to be in a little bit, have to be in slightly, flies and other things that bother you. You tend to have to be in more profit than just a little profit for the average person to really start wanting to, go buy something nice or put an addition on their house or buy a new car or anything like that. So once you get to $120,000 per coin, by his analysis, quite a significant number of the Bitcoin holders will be in profit, enough profit that it's the kind of profit that they start thinking what they want to do with their Bitcoin. So you start getting some more serious sell pressure by people who say, hey, held the Bitcoin for a long time, maybe bought it at 40,000. Here we are at 120,000. I've tripled my money. And, maybe it's time to buy something nice. Now, that's obviously a very healthy process because it's the way everybody else in the world gets Bitcoin. Since perhaps maybe 5% of the world owns any Bitcoin at all, and the vast majority of those own very small amounts of Bitcoin, it's a good thing when people who have held Bitcoin for a long time decide they want to buy stuff, because otherwise, how would the rest of the world that doesn't own any Bitcoin end up with Bitcoin? At some point, you got to have someone who is holding Bitcoin want to improve the lives of themselves or their family in some way, which results in them selling some Bitcoin. And who do they sell it to? They sell it to some of the 95% of the world that owns zero Bitcoin. And that's how those people get Bitcoin in the first place. Okay, so what happens at 150,000? So based on all of the, most recent analysis of Bitcoin, according to James Check, Bitcoin has spent less than 5% of its total lifespan above a number that in this case is about 105,000. Now, he analyzes the price at which every single, the first time any Bitcoin was bought by anybody, and averages that across the entire cohort of everyone that owns Bitcoin. Now, he obviously doesn't know who owns what Bitcoin, but on the Bitcoin blockchain, you can see the price at which every Bitcoin transacted most recently. So you can get a sense for the price at which people are buying and selling Bitcoin. And with the Bitcoin exchange traded funds, the ETFs, you can also get a sense at what price people are buying and selling Bitcoin based on how much new Bitcoin is being acquired or sold off on any given day of stock market trading for the Bitcoin ETFs. So as a result of that, according to him, at $150,000 per Bitcoin, you start getting what he calls overheated enough that you start running into pretty significant sell pressure, as in there's just a lot of people in a lot of profit. All the people who bought Bitcoin last year, 2024, we spent, 7.5 months with Bitcoin between 55,000 and 70,000 a coin. So up at $150,000 per coin, you're looking at all of those people are in double or triple their money in Bitcoin. And humans have this just incredible desire to part with things once their gains hits a certain level. Now, the smart thing, obviously, is to hold Bitcoin as long as you conceivably can for as long as possible, but that's just not human behavior. Actual human behavior is the longer humans hold something, the greater the gain on that thing, the more they are likely to want to alter their lifestyle. And that's the behavior of everybody, rich people, poor people, middle class. If you give them money and they triple it, at some point they're going to decide, rather than sitting on tripled money, that they want something to improve their life or the life of their family, and they will act upon that, and that is how they will end up selling some of their Bitcoin. So that will, happen most aggressively at $150,000 per coin. Now, James Check also analyzes what is the highest that he believes we are likely to go this cycle if you are a super ultra optimistic, super, hyper bull. And he puts that number at $220,000 per Bitcoin. So again, we're at 104 now. So he's saying, look, at $220,000 per Bitcoin, it is almost irresistible that just way too many people are in way too big a profit, that human nature just cannot stay in that much profit without selling Bitcoin. Any human on the planet, if you walk in and they, 2x, 3x, 5x, 10x their money, or for some of the early holders of Bitcoin, it's way more than that, they are going to sell some Bitcoin. They just absolutely are. So he says in this cycle, which people typically talk about cycles in 4-year cycles in Bitcoin, because that is what sort of correlates with the Bitcoin halving cycle, which is, the rate at which Bitcoin issuance drops in half every 4 years, which is why there will only ever be 21 million Bitcoin, because at some point that halving cycle results in it dropping the new issuance of Bitcoin to zero. And then there is no more newly issued Bitcoin every 10 minutes. It just stops at 21 million. And then the Bitcoin miners run on transaction fees after that. Rather than a combination of transaction fees and issuance of new Bitcoin, they run exclusively on transaction fees. Right now, it's partially transaction fees. It's partially newly issued Bitcoin. And right now, Bitcoin miners get 3.125 Bitcoin every 10 minutes. So 3.125 used to be 50, then it was 25, then it was 12 and a half, then it was 6.25. Now it is 3.125. Again, it's every 4 years. Bitcoin is 16 years old. So that halving has happened, whatever it is, 3 or 4 times. And we're now at 3.125, and it will drop to half of that, 3.125, in 2028. But anyway, so Bitcoin's price cycles tend to follow that. All right, so what happens when we hit the peak of this price cycle, which could be, 150,000, it could be 168,000. I think he puts a range. I should have looked it up. The range was something like, he said, between whatever it was, 150 and 168 or 162 or whatever it was. You can go look at the link I posted. He said, there's just so many people in profit that you just start to get a lot of sell pressure. And at some point you get a pullback, and the pullback is an opportunity for the rest of the world to catch up in their own Bitcoin acquisition, for the total base of people who own Bitcoin to expand, and for the supply to catch up with the demand to catch up with the price, which then creates an opportunity for the price to go much higher than that in the long term. But in the short term, it's just got to catch up, because the price just gets a little bit ahead of the demand, the sustainable demand. It's obviously never ahead of the actual demand, because demand drives price, but it gets ahead of the sustainable demand. There's just not enough people that are adopters in a significant long-term way to hold the price at, say, 150 or 168 or 220,000 or whatever it is. So at that point, you typically get a pullback. Nobody knows what percent pullback that will be. Let's run some numbers off of 150,000, for example. So at 150,000, a 20% pullback pulls the price back to 120,000. So that's $30,000. So 150 drops to 120. That would be a 20% pullback. A 50% pullback, which would be, let me do a 33% pullback, which is the highest it's been in the last year or two that I recall, was a 33% pullback. That would drop the price from 150 down to 100,000, which is just under where it is right now. And again, it's not like it would stay there. It's just that's the lowest it would touch before ultimately starting the march back up again. And then obviously you could end up with something, much more radical, like a 50% pullback, which could temporarily, very temporarily, drop $150,000 Bitcoin down to $75,000 Bitcoin. Now, you may be thinking, but wait, why would I not just wait for that pullback and potentially buy Bitcoin for less than $104,000 per coin? And the answer is because nobody, not me, not you, not Michael Saylor, nobody knows when the next Bitcoin pullback will be or what percent it will be. So if we plow up to 150,000 and we end up with a pullback of 20% down to 120,000, then you never get a chance to buy it cheaper than today's price. And then you get left behind and tough luck. So that's a very high risk on an asset that has a high likelihood of going up 1,000% in the future. Trying to get a 10 or 20 or 30% discount on Bitcoin and risking 1,000% future upside is just totally sort of a bet that makes no sense. Also, if we get to $150,000 per Bitcoin and then there's a 30% price correction, a 30% price correction as opposed to a 33% price correction, I believe puts the price above 104,000. I don't know what exactly 30% off of. I should be able to run that math in my head, whatever that is. But it ends up, I think, with a price that's slightly higher than the price it is right now. So for all of those reasons, it generally makes sense to buy Bitcoin and hold it as long as possible. Now, I will do a separate video about the difference between buying Bitcoin lump sum and buying Bitcoin dollar cost averaging. But I'll save that for a separate video. But what typically happens in a Bitcoin price drawdown is for some series of months, or the longest it typically is, like back in 2022, is about a year. And that was because a bunch of stuff blew up all at the same time. So, the Bitcoin price, everybody kept predicting that it had finally bottomed. And then some new stupid, bad business practices from Sam Bankman-Fried with FTX or whatever it was would then extend things a couple more months because it was just the insanity of stupid business practices just didn't seem to stop in 2022. But it always eventually does. Always eventually it's back to normal and the bad actors have been washed out and it marches higher. So we don't know once Bitcoin hits 150,000 or 168,000 or 220,000, nobody knows what percent price correction we could go through. If we did, we could all make decisions exactly when we should buy Bitcoin and when we shouldn't, and how much and all that. And obviously that information does not exist because it is impossible to time the market. So all we know is that according to James Check, the price is likely to be significantly higher in the future than it is now, even in the short term, and that Bitcoin will have a harder time flexing its muscles and growing uninterrupted, starting when it hits about 120,000. And certainly when it hits 150,000, and at some point along the way, it will need to take a little breather, and then it will start to march higher again toward 500,000. And, then it'll probably take a breather at some point along that way, in a significant way before $1 million. So most people in Bitcoin are saying we're probably looking at two significant price pullbacks, before we get to $1 million per Bitcoin. One sometime in the, next 18 months. And one probably about 4 years after that, just because the Bitcoin 4-year price cycles tend to happen that way. So maybe we'll get, in the next 7 years, we get to $1 million per Bitcoin. Maybe it'll take 10. Nobody knows. It's just 100% a function of how fast the world can figure out that Bitcoin is better money. But that does not change my recommendations, which is buy as much Bitcoin as you can, hold on to it for as long as conceivably possible, and that's the formula. That's always the formula. That's never changed. That will continue to be the formula. And as we get higher into some of these price levels I've talked about, I will start recommending people dollar cost average instead of lump sum purchase. So it is not too late to lump sum purchase Bitcoin, in my opinion, for however much you want to put in. And then, as the price gets higher and higher, at some point I would say, well, look, you might be looking at a 30 to 50% price pullback at some point. Or 20 to 30%, whatever it is, pick a number. But since you probably don't want to buy at the top and then have to wait, a series of months or whatever, or even a year or two until you're back at that price, I will recommend dollar cost averaging because that's a great way. If you think a price correction is coming up, that's a great way to invest in a lower risk way. Although it typically does, the upside tends to be lower doing that. But it tends to be easier on people's psychology, as opposed to dumping a bunch of money in what they perceive to be super expensive Bitcoin, and then it goes through a series of months where the price is lower and they feel bad. And so you can avoid that with dollar cost averaging, and I'll do a video shortly about that specifically. So to summarize here, Bitcoin's at 104,000. The all-time high is 109. Once we hit 110, you'll start seeing people bail who bought at 108 or 109. Typically, there's plenty of momentum to blow past that. And then once we get to 120,000, you'll start hitting more momentum as a lot of people start feeling rich and start selling some Bitcoin to make their lives better in some way or another. And certainly by the time we get to 150, somewhere between 150 and $168,000 per Bitcoin, you will get a lot of that. Doesn't mean it can't go higher. It just means there will be a lot of people sitting on very large unrealized profit. Unrealized profit meaning they're in profit, but they haven't realized that profit because they haven't sold the Bitcoin. And that doesn't mean they'll sell all the Bitcoin. It just means they'll sell some of it to improve their life in some way. And, you know, a tiny microcosm of that is I've been talking on a couple of these videos about buying a generator, a whole house generator, so that I don't sit in the dark when my power is constantly out when I am in the state of Mississippi. I don't know why it goes out so much, but it goes out. It tends, Entergy, who is the power provider in central Mississippi, seems to have a hard time keeping the power on. When there's a storm, it almost always knocks the power out. I mean, literally, the power just goes out a lot, like a ridiculously lot. Way more than you would think in a first world country that the power would go out. But that whole house generator, I don't want to spend a huge amount of money on that generator, not at Bitcoin at $105 or $104,000 per coin. So I was at church this morning and talking to somebody, and they were commenting how much the power had been out. And I said, yep, I feel the same way. My power is out constantly. And I told them, a whole house generator for our house costs about 1/5 of a Bitcoin. They laughed and said, of course, you would think in terms of Bitcoin instead of US dollars. But to simplify that, a whole house generator is about $20,000 that runs on natural gas. And basically, it powers your house forever in the event that your power supply company cannot keep the lights on. So a whole house generator, in my case, is about $20,000. So that's about 1/5 of a Bitcoin. And I told the person before I thought about doing this video, before I had refreshed my brain on the latest James Check analyst research, I told them, I was like, yeah, I'm just not willing to spend 1/5 of a Bitcoin on a generator for my house. Now I am willing to spend 1/6 of a or 1/6 of a Bitcoin for a whole house generator, but not 1/5 of a Bitcoin. Well, later on, as I was thinking about it, I was like, that's interesting, because 1/6 of $20,000 or $20,000 is 1/6 of $120,000. So yes, that when Bitcoin is $120,000, suddenly it feels like I can afford a whole house generator because $20,000 is 1/6 of that. But at $100,000 Bitcoin, or even at $104,000 or $105,000 Bitcoin, it doesn't feel like I can quite afford a whole house generator at 1/5 of Bitcoin. So that's the difference between 1/5 of Bitcoin and 1/6 of a Bitcoin, is just I feel like I can afford 1/6 of a Bitcoin, but not 1/5 of a Bitcoin. So that's the difference of the psychology at Bitcoin 104,000 versus 120,000. At 120,000 a coin, someone like me says, hey, I actually would really like a whole house generator. We've needed one for a long time. It hasn't been worth less than, it hasn't been worth it to liquidate more than 1/6 of a Bitcoin. But at 1/6 of a Bitcoin, it kind of makes sense. Now, if the power keeps going out even more in the next day or two or week or two, maybe I'll bite the bullet and do it anyway. But so far, I'm like, I'm not willing to part with 1/5 of a Bitcoin. I am willing to part with 1/6 of a Bitcoin. So that's the sort of psychology that kicks in when Bitcoin's at 120,000 a coin, is people like me are buying a whole house generator at 120 that I wouldn't have bought at 104 or $105,000 per Bitcoin. And that's why it just gets harder for Bitcoin to rise. Now, I'm never going to stop buying Bitcoin. I'm going to be buying Bitcoin all the way up. I'm going to be buying Bitcoin at the top because I buy Bitcoin every 2 weeks when my paycheck hits. But more people are going to not think that way the higher the price gets. So even though I'll always be buying Bitcoin, I will also be making decisions like a whole house generator to make my life of me and my family better, so we're not sitting in the heat and the humidity every time the power goes out, which seems like it's a lot. So hopefully all that helps. The post I posted from James Check, who goes by Checkmate, on Substack, that is, I love his analysis. If you have a lot of money in Bitcoin and you like, keeping up with what is likely to happen and why is it likely to happen and all that. His service costs $29 a month. I obviously do not get anything. I only recommend things that are for free. I never get anything for any of my Bitcoin advocacy, but his stuff is really worth $29 a month if you have a lot in Bitcoin. If you have enough in Bitcoin that you really feel like you got a lot in Bitcoin and that it's worth $29 a month to have a real world feedback step by step of exactly what's happening with the price and supply and demand in the market, his analysis stands by far better than anyone else's by a mile. And for me, it's very much worth $29 a month to get that analysis, which again just helps me understand what's going on, even if it's not going to change my buying behavior, because I'm 100% Bitcoin. So it's not like I'm not going to sell it for any, unless I'm buying a generator or something that improves the life of my family. And I can't buy more Bitcoin other than every 2 weeks with my paycheck, because I'm 100% Bitcoin. I literally have nothing to buy Bitcoin with. But it's still helpful, and it's sort of comforting to see his analysis, and it gives you a great insight into what exactly is going on. So hopefully all this helps. Thanks.